Ain't it a great day? Ain't it a great day? Ain't it a great day? Ain't it a great day?
Hello everyone, my name is Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is September 2nd, 2025, and it is Tuesday after Labor Day, and Bitcoin has yet to break out of its 2-week descending wedge, falling wedge consolidation pattern. However, we are extremely close, and I would say one move away from breaking this pattern, right? This is what I'm going to talk about today, not just Bitcoin's imminent breakout, but also altcoins' imminent breakout. Altcoins are also one move away, and it's very clear on the charts, guys. If that sounds interesting to you, then watch until the very end. Hope everyone's having a great day. Let's get into it. Let's start with Bitcoin on the daily time frame. So here's the pattern we've been tracking, looking at. Okay, yes, my timing is off. I was saying that this was likely to happen during during Labor Day weekend, given the idea that we typically get low liquidity moves on holidays, but still nothing. And yes, we did get a semblance of a move up, but I don't count that. That's nothing. This is still, in my estimation, this is still part and parcel of the consolidation. We're going to look at that in a second, and why I believe that's still part and parcel of the consolidation, and not necessarily the impulse that we're likely to get, because that will look much different, and it will feel much different than what we felt these past few days, few weeks. Okay, so on the high time frame, on the daily time frame, you can see this is the channel, 2 weeks of down and sideways. Okay, it's quite literally down and sideways. And where I was correct is this is not bearish. The volume did not lie. Remember, I did a volumetric analysis of this last episode, and I said, these patterns, first and foremost, are bullish patterns. Typically, they tend statistically to break up and out. That was true because thus far, that's exactly what you're seeing. You're seeing price poking out of the upper resistance, right? So if you're bearish on something like this at a level where, remember, you are at a demand zone, a 50-day demand zone. This is the bottom of a 50-day demand zone. Remember, this is a 50-day channel. Bottom of the channel is support. That is support. All of this is support. So your falling wedge goes into demand. You're likely to break up and out from that. That's exactly what we're seeing in the, sort of in process. But let's look at the volume on the 4-hourly time frame. Look, exactly what I was saying with the volumetric analysis. Typically on these patterns, these falling wedge patterns, these bullish breaking patterns, you see falling volume until you get ready to break out, and then volume rises again, because that's where price wants to go in the immediate short term. It wants to go up. It doesn't want to go down. If it wanted to go down, you would see more volume the lower it went. But now it's starting to inflect upwards, and you can see volume starting to rise. Okay, that's volumetric analysis. I've already told you all before many times why I'm not a big volume guy in crypto, but I think for Bitcoin, it's useful, especially when you're starting out. You should know how to do basic volumetric analysis. It's important. It's a good indicator. It's one of the basic indicators that everybody should know how to use and read if you're serious about charting. Okay, so yeah, we have a very likelihood of continuation to the upside. This consolidation is more likely than not I mean, we're at 90% confirmation, 95% confirmation, thereabouts. This is an accumulation channel, okay? So on the daily time frame, it's quite clear that we're tending towards an upside breakout. On the small time frame, because we've been doing small time frame analyses on this price action, right? And why am I saying that we're one move away? Well, look, here you have the 2-week channel, and you have this. All of this is your smaller accumulation channel that you've been in. So you did all your work and you're making your way up and out of the channel. So if you want to look at Wyckoff accumulation schematics, you're at the final phase. I think it's phase E, and it's called you're forming SOSs, signs of strength, in phase E. This is towards the end of the accumulation channel. Just, Google Wyckoff accumulation, look at phase E, look at the SOS that comes towards the end. But this is what it looks like. And why does it look like this? Well, simply being you're matriculating up. You got rejected by the midline, you broke the midline, retested the midline. Now you broke up towards the top of the channel, and now the last move that I referred to in the teaser of the episode is the retest of the top of the channel. So remember, every single move up and out of the channel is consistent insofar as it's done. It's not consistent in exactly how it's done, but we always have an initial rejection at the midline, and then a subsequent break of the midline, retest of the midline, and then a move up and out of the channel, and then a retest of the top resistance of the channel as support. That's how all bullish breaks of channels happen in all of history. If it's a channel, that's how it bullishly broke out. So we know that there's just one move because we're at the top of the channel, and we should expect this retest, more likely than not, something like this, of the top resistance of the channel, right? This has been 2-week resistance. You just broke out of it. Now expect to retest resistance as support before moving up and out. Once you do that, you can leave this channel, and that's your official breakout. Your official breakout isn't breaking the channel, it's retesting the break. Remember, the official break isn't breaking, or the A wave, or the initial break, it's the C wave. The retest, it's after the C wave. That's where you get the impulse, the new impulse. The retest of the break, right? Because A, B, C, W, X, Y, whatever you want, these corrective patterns come in flavors of threes. So expect a flavor of 3 retest of the previous resistance as new support before continuation. That's the breakout you're looking for, not this. A waves are not breakouts. A waves are your initial break. You need the B wave and the C wave, then you get your real breakout. So that is the final move we're waiting for Bitcoin, okay? And so far, so good. We're getting exactly what we expected in terms of the price action matriculation. Now, people, please don't get confused. It's not that difficult. I know not everybody watches all my videos, so let me take a small moment to just recapitulate the medium-term the medium-term trade thesis. Let's do it on 4-hourly time frame. So medium-term trade thesis is we're bearish. Immediate short-term trade thesis is we're bullish. Okay? So in the immediate short term, bullish, because Bitcoin is more likely than not going to break out from this bottom, right? Support of 50 days, because this is 50-day support. Just like I said, this is a 50-day channel. You're at the bottom of a 50-day channel. Support is support because it typically is a demand zone where price responds accordingly. So if people are going to buy, it's going to be at demand, and that's exactly what you expect. Where now do we expect price to go to? The higher time frame analysis tells us all-time high. Also, the smaller time frame or medium time frame analysis says these falling wedges typically break out to the top of the wedge, all-time high. Everything's telling us all-time high. We've been saying this ever since, we were reading this and saying, oh, we're more likely to get a breakout to the top at all-time high, make a new all-time high. This is not new. All-time high, all-time high, all-time high. Immediate short term, that's the bullish thesis. That is the trade thesis on the immediate short term. Once we get to these levels, then that's our medium time frame trade thesis. Extremely bearish. Once Bitcoin gets over here, there's nothing bullish about it. Absolutely nothing bullish about it. Just like there's nothing bearish about Bitcoin here, there's nothing bullish about Bitcoin here. Okay? So please don't say, oh, I thought you were bearish. It depends on the time frame. You're not a bull or a bear if you're a trader, if you're an analyst. You're an analyst. You have to specify the time frame you're discussing, whether you're bullish or bearish, and then what your trade thesis is like. And then even a higher time frame, I'm super bullish because once Bitcoin, and this is just a teaser, we'll talk about it once we get closer to it, but it's been a while. I mean, I've been tracing this for hundreds of days, but once Bitcoin gets down here, there's nothing bearish about Bitcoin at this level. Nothing bearish. There is nothing bearish about Bitcoin when we get to these levels. I mean, this is the most bullish Bitcoin probably has ever been, ever. And I'm not saying that. That is not an exaggeration. That includes 2010. That includes 2015. I think that we're going to give 2015's bull run a run for its money insofar as how bullish we are at those levels. So again, quick recap. I'm bullish here. I'm bearish here. I'm so bullish here. Okay? That is my trade thesis on the immediate short term, the medium time frame, and then the high time frame. That's Bitcoin. I said in the beginning of the episode, I'm not only bullish on Bitcoin in the immediate short term, but also altcoins. Altcoins in general. Again, let me reiterate, this is not every single last altcoin. I think pretty much everything is going to move gradually, moderately. There are certain assets that are going to move seriously. Others, not so much. It's up to you to decide. That is a big part of trading. Distinguishing between runners and, good potentials and poor potentials, right? Poor potentials are off support. They haven't put in the requisite consolidation, accumulations, a lot of things. But you have to be able to read that. That's a lot of what we do in crypto portfolio mentorship and consultation. Details at the pinned comment below. In any case, why am I bullish on altcoins at these levels? All right, you have to first look at the high time frame read. The high time frame read is simply that you are pretty much fighting a 500-day resistance here, okay? This right here is a three-wave pattern, a completed, right, more likely than not completed corrective pattern. That is very, very, very encouraging. Now, this completed corrective pattern, like I said, is within a channel of 500 days, because if you measure just this portion right here, you're looking at 500 days of price action, okay? That's a big deal. Furthermore, you can also look at the higher time frame move, which is a 1500-day inverse head and shoulders bullish reversal pattern. Look at this, right? And when I say Bitcoin's one move away and altcoins are one move away, that's not referring to, what it's done on the 500-day time frame, 1500-day time frame, the weekly time frame, like what I'm looking at right now. I'm just setting the context, okay, just to be clear. But here you can see you have a very nice inverse head and shoulders, left, head, right. Okay, you have all aspects of a bullish reversal pattern. Very, 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 very promising. For people who do not understand if you're bullish on Bitcoin, and remember, just a quick recap, for those of you who don't know, we're looking at others. Others is an aggregate indicator that shows you all of the cryptocurrency altcoins minus the top 10 in market cap. Okay, so it's even better than the total 3 and the total 2, which are more heavily skewed towards the larger market cap assets. So if you're bullish on Bitcoin on the high time frame, how can you not be bullish on altcoins? I mean, look at that. Like, altcoins are absolutely going to demolish Bitcoin for a very long time. And again, the past 500 days is just this right shoulder. I told you in a previous episode, if you've been in altcoins and you feel like you haven't been doing anything for 1500 days, there's a reason. This bullish reversal pattern is 1500 days long. And that analysis was not done on this chart. It was done using another chart. There's the confluence. 1500 days. That's 1500 days of pain, 1500 days of down and sideways, 1500 days of consolidation, 1500 days of very mercurial, unpredictable, crap consolidative price action. That is going to pay off in a major way. And the first way it's going to pay off is in this move right here. This move right here, that's the move we're looking for. So others going from where it's at right now to about 548 billion. So that move just in the aggregate is, say, a 90% move. Expect a 90% move just off the rip for altcoins, okay? And that means the majority of altcoins, because that's what others represents. Now let's go on the smaller time frame and see just why I'm saying one last move. I'm not saying this necessarily on the high time frames, although it does apply on the high time frames. I'm talking about the small time frames. So context, remember, is always high time frame, low time frame. Gain your context, understand, because if your high time frames are messed up and the high time frames don't make sense, the high time frames are bearish, the low time frames may be bullish, maybe, but they lead into bearish price action. It's unlikely, it's very hard to read, it's less the probabilities that they play out bullishly is less likely given the high time frame. It's always the high time frame that's more likely to play out, and the low time frames comply. Okay, so even smaller time frame, this is daily time frame. Again, this is 500 days. This is a completed corrective pattern, and what you have here, remember, this is a 500-day channel as far as we're concerned. First move, you went to the midline, you rejected off of it, you went back to the scene of the crime, and now you're consolidating at resistance. Now keep in your mind, as we zoom in, your consolidation at resistance. And I will repeat this. You do not break resistance at resistance. You do not break support at support. Those are words to live by. We're not breaking resistance at resistance, although it may seem like it. The measured move for this break actually started here at support. Okay, and this is an intra-wave correction. So we're not breaking resistance at resistance per se. So that adage still applies. Now, if we look at this move, now the move I'm looking at specifically is a 40 or 50-day move. Let's call it a 50-day move. This is a quintessential running flat correction. If you know nothing about Elliott wave analysis, there's three types of corrections. There's triangles, there's zigzags, and there's flat corrections. Flat corrections are the most common Elliott wave corrective patterns, okay? And within flat corrections, you have expanded flats, you have regular flats, and you have running flats. I think that's all. Running flats are particularly uncommon. They're exceedingly rare. And the reason they're rare is because you need extremely bullish conditions for them to materialize. So a regular flat correction looks like bullish flat correction looks like this. A, B, C. A wave here, B wave there, C wave there, okay? And your extensions, right? A wave goes down here, B wave goes up here, C wave typically comes down and makes your flat correction, right? That's why we call them flat corrections, because at the end of the day, it looks like a flat surface was created, okay? And obviously flat corrections look a bunch of different ways. I'm just showing you the, textbook variety flat correction. But your running flat is distinguished by the strong buying pressure. When I say strong buying pressure, basically buyers are so enthusiastic about the asset, about the commodity, that they do not let that C wave come down to the level of your A wave. Here you have an A wave, you can say 1, 2, 3. That's your A wave. Your B wave, 1, 2, 3, right? Your C wave, instead of coming down here, right, and waiting for it back at the level of where the A wave found support, the C wave comes nowhere near that. And it gets a lot of beginners because they're like, oh, I know this is a flat correction, and they set their buy orders here, or they're expecting a retracement here, or they're shorting. If you're trading corrective waves, sometimes you look at that C wave, you're like, okay, that's an impulse 50-day channel. I'm going to short at the top of the C wave. Let me calculate the B wave ending, the C wave starting. That's a really good trade typically, because you have some distance and it's it's an impulsive move. So that's where you make your money, in impulse. But I'm speaking from experience here. I've been on the short end of this, where in a bull market or in a very bullish environment, if you short C, you end up short. You end up, with the short end of the stick. Why? Because it tends to form this running flat, where instead of getting an impulse to the downside like this, that's just a straight line, you get this falling wedge. Once again, we are presented with the falling wedge, extremely bullish pattern where you dip down into demand, but the demand zone, instead of being down here, is all the way up here because people want it so much, right? They're pressing it up, okay? And that C wave, instead of looking like a straight line, like a 1, 2, 3, 4, 5 impulse, it looks like a triangle, okay? And that's another. So again, I started saying 3 types of corrections in Elliott wave analysis. There are flats, there are zigzags, and there are triangles. Here you have a triangle within a flat, okay? And triangles are distinguished by having 5 waves. And remember, after learning this, you're going to start looking for it. Don't bother looking for this unless the environment is super bullish. You'll look for it in a bear market, you will never find it. You won't find it. It just doesn't exist. It's super rare. It's only when in the bull market, and this is also evidence, a mark of a bull market starting, or a bull market sort of in bullish environment, you see these in the wild, left and right, right? So you have A, B, C, D, E, because these triangles are comprised of 5 waves, and they form a triangle, okay? And you can look at it in a textbook. Let's go on the smaller time frames, and you'll learn any good textbook of Elliott wave analysis. I have a couple in the description of this video. You'll learn that not only do you get 5 waves, but you get 5 waves that look like, that come in flavors of 3. 1, 2, 3. wave A. 1, 2, 3, wave B. 1, 2, 3. So once you get to wave C and D, you tend to have more complex variations of those flavors of 3. So wave C might be this, or wave C might be this. I don't know yet. I have to wait until wave E completes, and then I can read it better. But I'm telling you with confidence that there's one more move left. Why? Because you don't break resistance at resistance. I didn't know this when I first started learning this, and when I first started trading these triangles. And it would have helped me a great deal, because earlier me would have thought, oh, this might be this might have been wave E, this might be the impulse up and out. But I would probably be wrong, again, because you do not break resistance at resistance. And although you can say this measured move started down here, it's not convincing. To me, it looks as if you want to come back down here, and that move up and out of the triangle is going to go in one straight line up, hit its head on the top resistance, and then come down, retest that triangle as support, right? And you're going to get your final wave E, and then A, B, C, up and out. Remember, A wave is not the breakout. That's the initial break of structure. You need the B wave. This is the real breakout right here. Right there. Okay? So that's what I'm waiting for. That's what I'm looking for. I think one more move, that E wave, and then you get your initial break of this triangle. And this is a big deal, because again, look what you're doing. You're breaking this triangle, which, by the way, is about a 22-day affair at this point, right? Almost a month at this point. You break this triangle, and you eventually break up and out of this 500-day resistance that altcoins have been in, and altcoins start to fly. Once you get to the top here, you come back to the midline, you retest that as support, then you matriculate up, and once you get here, altcoins absolutely, I mean, they're already going to cream Bitcoin on every single one of these moves, but this is when it really starts getting mental. All right, so that's my take, that's my analysis, guys. Hope this was helpful, useful. Like, share, and subscribe if you got value. Consider tipping with all the means of tipping on the pinned comment. Consider my crypto portfolio mentorship and consultation service that you can sign up to if you're serious about trading and you want to trade altcoins with me and my group. We basically identify altcoins that are actually going to exhibit continuous, perpetual, regular bullish momentum during alt season, right? Not just one move here, one move there, but like they're actually going in pure impulse, and they're going to enjoy the breakout of this right here, this 1500-day inverse head and shoulders. Not every altcoin is going to do that. Some will, some won't. It's up to you to decide and figure out which ones will, which ones won't. These are the assets that we're trading in crypto portfolio mentorship and consultation. In addition to that, we identify high probability resistances and supports to maximize your portfolio during the course of the bull run. Okay. Next, we have the single asset analysis. If you're only interested on my take on one asset, one commodity, one stock, that's for you. All you have to do, use any of the payment methods below, send payment, and then email me and tell me what you want me to look at. And within 24 hours, you'll have your analysis. After that, you can email me again with follow-up questions. 2 or 3 is fine. And that's it. People have been quite satisfied with that product. That's a new offering that I've just started, offering. So that's single asset analysis. You can find details to that also at the pinned comment below. Last but not least, BTCC, the exchange partner, is offering 10% cash back to all new users that deposit at least 500 USDT onto the exchange. So just deposit at least 500 USDT onto BTCC. make one single trade, either a leverage trade or a spot trade. And remember, BTCC is a serious exchange. They're the oldest exchange in all of crypto, never been hacked, not once. They're based out of London. So it's an exchange that I personally use for my assets that I want to, hold on exchange. And I feel quite secure in doing so. And I feel secure in recommending that to clients as well. So that is a really great deal. You wait 7 days after making that first trade, and then you get your 10% cash back. The maximum rebate is $10,000 on a $100,000 deposit. Guys, that's it. Take care, and I'll see you next time. Bye.
My prevalent time slot, I vocalize, too deep to localize, even when I'm right on the surface. You act surprised how I work this, but I can't lie. Many a good alibi, I'll catch you later. Visions are vividly enhanced with emphasis and amethyst to develop morale advantages which help us manifest. Magnanimous, we body vitals like evangelists. So listen when you're dealing with people who be revealing premonitions with precision. At least that's what I'm aiming at for now. I speak the language of the world, meandering throughout the crowd. Used to feel safe to say anything, but now it's a risk. It's hard for me to let go when all I can do is reminisce. Gone like the wind, here's where I begin. Should I smile or should I grin what's happening?